Okay, I hope I can hear you from the headphones now.
Okay,
Okay, awesome, awesome.
excellent
Yeah.
stuff. Right. Okay, I'm going to press record and get cracking.
Okay.
Okay, modern technology. Okay. Good morning, good afternoon, and wherever you might be listening, this is the Swinging Palm Trees podcast, and I am your host, Akin. And thank you for listening or joining us on today's episode. My guest today is a chap I met recently online, and all through the joys of crypto. And anyway, I'm going to let him introduce himself. So, could you kindly introduce yourself to the people, please?
Hello, everyone. Well, my online name is Mao Maverick, and my address is mawa.dcl.eth. So that's literally my virtual address. So that's I think that's you can find me anywhere with Mawa Maverick, and my address you can find me there. Yes, that's all I can. I've been in crypto since 2017. That doesn't necessarily reflect to success, but it reflects to the knowledge that I've acquired over those years. So I think that is more valuable. So that is me in a brief sort of way to introduce myself. And thank you for having me on your show, man.
No,
Pleasure.
the honor, the honor is all mine. So, Mawa, can I call you Mawa or
Yes, that's
Maverick, or should I call
perfect.
you,
Mawa is
or can I
perfect.
call you, or can I call you Arnold?
Oh gosh, how did you know that? Where did you find? Oh my gosh. Okay, okay. Oh no. You know what? Okay, that's what my family calls me. So that's what my family calls me. But everyone else that's not that's my friends or close friends, they or outside of my family, they normally I introduce myself as Mawa. But yes,
Okay.
yeah. So either is good, but for the sakes of online conversation, I think Mawa will fit better. But
All
Arnold
right.
is very sentimental.
Okay. Let's stick with Mawa.
Yeah.
So, why the name? First of all, why the name Mawa?
Mawa, I thought about that name in like 30 seconds. At the time, I was in China and I didn't want to use the name Arnold because it's so hard for them to pronounce. And I was new and I had one chance to introduce myself. And I had like 1 minute. Some people had invited me to play volleyball. They didn't really know who I was. So I'm like, this is gonna be the time I'm going to introduce myself. So I was thinking, should I get some weird Chinese emperor name or something as a nickname? And I was like, you know what? I'm gonna go with Mao in like 5 seconds, and that's when it all started. That's like 3 years, 4 years ago, 3 years ago, something like that. Yeah,
Okay.
and then I added the
And
Maverick later.
okay. And I'm guessing you were studying for your PhD in China at the
Oh,
time.
damn, you've
Yes.
done a tremendous amount of research. Oh my God, yes. Yes, I was. Yes, I was. There was a PhD in machine learning and artificial intelligence, and I was trying to pursue that. But that's how I actually found out about FET. It was Fetch.AI. It was very interesting. But let me not get ahead of myself. But yes, that's what I was doing there.
Okay, so you are in China studying your PhD at the time.
At the time,
Um,
yes.
so where are you from originally, if I may
I'm
ask?
Ugandan. I'm Ugandan. I was born and raised in Uganda. Yeah. Yeah, that's East Africa. Though I've spent a bit of time in Asia, but I did my university in Malaysia. So I was there for a while. But born and raised in Uganda. Yeah.
Well, I had someone on the episode some time ago. His name's Jonah, and he hosts a Blindian project, which is about people who are in Asian and Black relationships. So
Right.
shout out to Jonah from the Blindian project. Okay, so
That's
Mawa,
nice.
we're
Yes.
going to talk about all things crypto.
Awesome.
This is the episode because I have no idea about cryptocurrency
Nice.
whatsoever. Well, I say I don't. I have a smidgen of information about cryptocurrency. So let's just take it as if I am a complete novice. Break it down to me like someone who is 5 years old in kindergarten, but trapped in an old body. What
Oh.
is cryptocurrency?
Okay. Cryptocurrency is a way to communicate with someone or a machine or anything that's so far away from you, but that communication is kept between you and that entity, and that's it. You don't need any machine or any person in between of that communication. So it is the way you can think about it is like the way you get cash and hand it to someone else. I'll just use cash because that's the easiest sort of thing. People affiliate crypto with money. So if you get cash, hand it to someone, that is crypto. But imagine if your hand could stretch all the way to the other side of the earth or the other side of the globe and no one can see that hand. Okay, anyone can see, but they cannot see who it belongs to. That's what crypto does. And because of that, that happens with different things we call consensus algorithms. So because of that, we're able to democratize communication and finance. Yeah.
Okay.
Yes. Just think of it like handing cash to someone and no one knows about it. Yeah.
So lately, cryptocurrency has been gaining a lot of attention
Right.
in the media, especially the news, and especially governments. And with what's going on in the world at the moment, with recessions, inflation, and what's the name of this country down South America? We just bought Bitcoin. What's it called?
El Salvador.
Uruguay.
El Salvador.
So El Salvador.
Yeah.
Thank you very
Yes,
much.
of course. Yes.
So,
Yes.
so why is the government, or why are governments so against, well, not all, but why are certain governments so against cryptocurrency?
That's a very good question. Now, the way I think about that question is that regardless of whether a few politicians are against crypto, many of these politicians, their children are invested in the crypto space. Many, many of these politicians, they're starting to engage in DeFi platforms. Many of these politicians, just like the way you see news channels like Fox News, they're starting to jump onto the crypto bandwagon. Why? Because there's more views. So when you ask me, why are some governments against crypto, it's because it's a new space, it's a strange space, and everyone fears change. And of course, their status quo is, at least they think, is threatened. But obviously, the crypto community is not here to. It's the best way to think of it. It's the most peaceful revolution. I think that's the way you can think of it. And of course, the idea that anyone can spawn up their own sort of something that looks like a currency. I think it's governments cannot wrap their heads around the fact that they cannot have control over such a fundamental thing, which is the financial structure. So some governments, it's I guess they're like, how are we going to control the fiscal and monetary policies? How are we going to avoid things like inflation and deflationary tendencies within the economy? So some people, it's legitimate claims. However, it's just a new thing that a few people are scared of, but they'll come around to it.
So, my understanding is that cryptocurrency is seen as a decentralized way of exchange
Yes.
between one party and another, unlike your banks, which are centralized. That means with cryptocurrencies or crypto platforms, i.e., Bitcoin, Ethereum, there isn't necessarily a centralized decision making as to what's happening. Am I correct in saying that?
Yes,
or-
yes, the fundamental operation of these blocks. For example, Bitcoin, the fundamental way it operates. When you look at the proof of work consensus algorithm, that's the thing that enables the blockchain to solve something we call a Byzantine fault tolerance problem. So that consensus algorithm has been functional since 2009, since the first Genesis block of Bitcoin was mined up to today. No one has been able to crack that, and it has continued to run. And the more you mentioned, it's sort of a decentralized way of transaction. So the way the decentralization happens is that people, or they solve mathematical problems and they get rewarded in Bitcoin. Now that process does not require an intermediary, and no one has been able to crack it. And that's why, essentially, that's why it's decentralized. It's a
Funny
collective
story.
effort.
Okay. Funny story. I work in publishing in my full-time work.
Nice.
And one of the magazines I work on is called The Actuary.
Right.
And I was commissioned as a picture editor to come up with an idea to visualize cryptocurrency. This was back in 2009, 2010, when Bitcoin was becoming a thing. And I visualized it, got it sorted out. You know what? I never even considered looking at it again. I just thought it was a fad.
When was this?
This was back, I think it's 2009,
Wow.
2010. I know.
Oh my
Just
gosh.
thinking about it right now because it just
But it
breaks
happens.
my heart,
It happens. Yeah, yeah.
And so it was only up until a couple of years ago that a friend of mine was talking to me about Bitcoin. I said, Bitcoin, I've been seeing this going around a lot. And then when I saw how much the Bitcoin was as opposed to when I first heard about it, because at the time I think it was about £10
Wow.
a coin. And now up until its high, it was 64,000, I believe.
Yes, yes.
I mean, there's a drop now, but we'll talk about that later
Yeah.
on. But like you said, hindsight.
Hindsight. Exactly. Hindsight. Exactly.
So, looking at the cryptocurrency, as it were, would you say that cryptocurrency is a form of evolution of
Oh
finance
my
or
God.
interaction?
Oh my God. It's a form of evolution of the way we see finance and interaction in the sense that financial markets can crush and take down everyone with them, but with crypto, one financial system can crush and others continue thriving because it's whatever is causing it to crash has no. I know Bitcoin still controls the market, but it's the market's still very volatile. But those are some of the advantages you can look at if you're looking at the future of crypto, and it's cutthroat competition, and the best product wins. Yeah. So the collapse
So,
of one financial system within the decentralized system does not have to affect the others, and I think that could dramatically change the way we see finance. Countries independent in their financial structures and so on. Individuals don't have to depend on the bad decisions that politicians make within their local geographies. They can directly interact with other people in other geographical locations in the world without necessarily having to be limited by their geographical location. As long as you have an internet connection, you have talent, and you appeal to someone out there, it's going to be easy to transact with that person. And that's major. That's extremely big. I think the best revolution we can ever see, the most peaceful one, and one that actually empowers people, as opposed to, revolutions normally lead into tyrants, tyranny, and so on. But with this one, is that individuals are able to change their lives and change the way, make their own personal decisions in terms of finance. Yeah, yeah. I mean, there's a lot that can be said about that, but yes, in short.
before I go any further to the listeners, just so you know, anything that Mawa and myself discuss is not financial advice.
No.
This is for you to have a listen. And if you are interested in cryptocurrency, go away and do your own research. And if you do have any questions, there are people who are kosher who will be able to give you some feedback. And at the end of the episode, I'm sure Mawa will give you some information as to how to contact him. But going back to all things cryptocurrency. So here's another word which I'd like you to break down to the 5-year-old me trying to figure it out. What exactly is DeFi?
Huh. DeFi. Okay. DeFi. The best way to see it is that we have centralized finance. That's basically what we've known. That's what the world has known for a very long time, and it has been accelerated with as cash gets eroded more and more. And ever since President Nixon back in 1979 or whatever took the U.S. off 1971 took the U.S. off the gold standard, it sort of led to this cascade of what we call quantitative easing right now. So. Could you ask that question again? I went off on a tangent.
No, it's fine. It's all part of the knowledge and information. What exactly is DeFi?
Okay, so that led to centralized finance. As you can see, banks the way they are, you have to sort of line up and get to sort of listen to what a central bank says and how they control their interest rates, and then that channels through the banks that we normally use. And then normally all the things channel through that. There has to be government involved, or maybe a company involved, a strong institution like PayPal, and so on. So decentralized finance essentially takes away all that. It's governed by mainly things we call smart contracts and decentralized autonomous organizations. That simply just means things that are hard coded to have certain instructions. So you input one instruction, it outputs the other instruction. That's it. and that acts as the intermediary. No banks as intermediary, like in centralized finance, no central banks making those decisions, and no fundamental decisions like fiscal and monetary policy controlled by a few people. So decentralized finance allows people to take their finances and look out for the best option that works for them. You look out for an option that has maybe better interest rates, or that is within a community that interests you, or that's within a certain sort of cultural acceptance that's fitting within your own moral standards, and then you're going to go with that option. So it provides more options in the way people can use their finances and money. And the best thing about it is that you don't have to be an accredited investor to participate in decentralized finance.
So, in other words, you are your own bank.
You are your own bank, and you make your own decisions.
So, is this the reason why the IMF, the International Monetary Fund, are kind of freaking out with El Salvador at the moment?
Yes. Partly one of the reasons. Of course, it's all
One of the reasons.
Yeah, it's all in the guise of, this is you're already a small economy. This might affect what you're doing and so on. But it's just that if El Salvador is running their reserve currency as Bitcoin, the IMF has nothing to do with that. The IMF doesn't know where these private keys are. The IMF doesn't know who's in charge of whatever vault, where the Bitcoins are, who are the signatories to these multi-signature wallets of this Bitcoin. How do they decide how much interest to give their citizens in case they participate when they download this app? These financial decisions are left with El Salvador and their problems and their people, and they'll solve themselves out. If they make mistakes, they learn from those mistakes, and then they grow and become better. I think the IMF, the fact that they're losing control to something that they can never control. It's amazing to think that politicians think they can control this, yet their children are invested in this stuff. I mean, like, come on, Dad, come on, Mom, you're going to take away this thing that I spend my whole life on. So it's going to make it really it's a very interesting thing. And I think this year we might have another country announcing Bitcoin as their reserve currency, and especially if Bitcoin bounces back significantly, I think that's going to create some major headwinds in this space. So IMF is scared of losing that control that they have over other smaller central banks in other countries, because them and the European Central Bank, they have a lot of power and a lot of say in what happens, in what financial decisions other countries make, all the way to their public education system, their health systems. They call the shots, because all the money that they give to these countries, strings attached. When Bitcoin goes up to $500,000, guess what? El Salvador, now all of a sudden, they have a ton of money that they can use to help their population. So pick and choose whichever reason you want. It might be one of them.
A telling sign that we probably are on the right path is when you have certain financial institutions like Goldman Sachs and JP Morgan investing heavily in cryptocurrency. And I'm not talking maybe a few hundred pounds or dollars. We're talking billions.
That's right.
If that's not a warning sign for those who are skeptical, follow the money.
Follow the money.
Well,
follow the money.
Follow the money.
Follow the money. As simple as that. You're right. You got it on the head. Follow the money. You look at the VC money. You look at what they do and what they say. I mean, we've seen this with what's his name? JP Morgan, the president of JP Morgan, saying and all the other Warren Buffets calling Bitcoin rat poison. And yet later you find out that somehow they're connected to a fund that it's pushing forward some kind of crypto narrative, and the companies announcing like JP Morgan coin and so on. There's so many things that have been said, and the entities that said those things acted opposite to their words. So it's interesting when you observe crypto, the way it has evolved. You can clearly see the lies, like all these things that people think are conspiracies. It's now out in the open. You can actually literally see it. I think that's one of the beautiful things about crypto, is that it's so transparent. Is that it exposes the corruption that's innately within the current political structures. So,
So, another question from 5-year-old me about all things cryptocurrency, and you are an amazing teacher. Thank you very
Oh, thank
much.
you,
Would you
thank you.
like an apple?
Yes. That would be awesome. An apple a day keeps the doctor away, right?
So, what is the difference between a stablecoin, an altcoin,
Mm.
and Bitcoin?
Okay.
Because Bitcoin is the daddy. So
Yes,
when we
Bitcoin is the
break it
daddy.
down from
Mm.
so when you break it down from Bitcoin to stablecoin and altcoin, what exactly does that mean?
Okay, altcoins are coins that name came from all coins that were not Bitcoin. So alternative coins. So Ethereum, of course, Ethereum is starting to establish itself as its own entity because they introduced some significant stuff, smart contracts and stuff like that. But altcoin originally anything that's not Bitcoin. Stablecoin is, simply speaking, is a cryptocurrency that maintains a pegged value to the dollar or whichever country, whatever fiat currency you're using. It's not supposed to fluctuate. It's supposed to maintain a 1-to-1 ratio with that fiat currency. And yes, so that's the main thing. Then Bitcoin is the original one, which uses proof of work algorithm to do its thing.
So what's the difference between proof of work and proof of stake?
Proof of work is the first consensus algorithm, which basically the way it works, you run these things called application specific integrated circuits or ASIC miners.
Could you say that 5 times in a row?
ASIC, which stands for Application Specific Integrated Circuit. Application Specific Integrated. Okay, so basically, what you do, you have this thing called an ASIC miner, or you can even create your own if you know how to do that. So that's how decentralized this space is. And what it does, it solves a mathematical problem called a nonce, a number used only once. So once you're able to solve this mathematical problem, you get rewarded with 25 Bitcoin for every block that you solve. Then that Bitcoin is cut in half every a couple of blocks, which rounds off at around every 4 years. So I think right now it's about 12, if it's not 6. I always confuse that. So it gets cut in half every 4 years around that time. Yeah. So that's proof of work. You have to have a physical element that solves that mathematical problem. Then with proof of stake, think of it as you purchase the cryptocurrency or whatever is representing that particular ecosystem, okay? And then you have these people called validators. So in Bitcoin you have miners, in proof of stake you have validators. So these validators strengthen the network, just like the miners in Bitcoin that strengthen the network. That's when you hear of hashing algorithm, that's proof of work. It becomes higher because there's more and more people mining. With proof of stake you have validators. Basically you can set up in your own room computers, the strengthen the network by the tokens that you've staked onto that validating node. So it's called a node. And then other people can stake to your validator, and that helps to strengthen the network. And that's directly tied to the tokens. And the people that do that are rewarded through the inflationary nature of those tokens. They're rewarded with those tokens. In Bitcoin, you're rewarded by those things called Bitcoin. And there's, by the way, just for your information, there's no such thing as a Bitcoin on the Bitcoin network. What Bitcoin is 100 million smallest units of accounts, which are called Satoshis, and these units amount to what we call a Bitcoin. It's just easier for accounting. So proof of stake does not have to use that sort of intensive physical infrastructure. But there's many other, sorry to cut you off, there's many other consensus algorithms that are being experimented on.
Okay. So at the moment, there seems to be a plethora,
Yes.
a plethora of coins out there.
Yes.
You've got your stable coins, altcoins. You also have your crap coins.
Yes.
All doing the rounds at the moment. And from all this stuff, you've got what people are calling yield farming.
Yes.
What does that mean?
Yield farming, simply speaking, this is where it originated from. Uniswap, that's one of the first decentralized exchanges to completely create, innovation comes from the simplest solutions. Bitcoin with a consensus algorithm, that was the simplest solution solving one of the hardest problems. So Uniswap, a decentralized exchange, in other words, it's controlled by smart contracts, came up with this formula. They created something called a pool, a liquidity pool. Let me give an example. You have Ethereum, half of Ethereum, and the other you have USDT. So you put $1,000 worth of Ethereum, and you also deposit $1,000 worth of US dollars. So half in half, you have $2,000 in total. So when you do that, a platform to incentivize people to do that because it increases the amount of liquidity. So if someone comes and they want to sell 10 million worth of or buy 10 million worth of a cryptocurrency, they can just pick it from that liquidity pool so other people can keep adding. So yield farming is when people add that liquidity, because it's such high risk, you can face things that we call impermanent loss, but we'll go into that later. The platform rewards you with their token for doing that. And that is yield farming, simply speaking. You get rewarded for providing liquidity. Yeah.
Okay, right. Once again, listeners, go out there, do your own research, because at the moment, cryptocurrency is in its wild, wild west
Yes,
stage.
very much.
Someone described where we are at the moment as the Napster
Yes.
of its time.
Yes.
Because cryptocurrency is here to stay, no matter what anyone says.
Yes.
It's not going anywhere.
Nope.
So once again, do your own research and advice, and we'll take it from there. So what is a white paper? I mean, you've got, why can't there be a black paper or a gray paper?
I think people
or
can
even a pink paper.
they are there. Some of them. They are yellow papers. They're white papers. Of course, I can't go into the details, but basically, simply speaking, a white paper. I think that word was made. Very many things were made mainstream, like cryptography. Many people are interested in cryptography because of Bitcoin. It's amazing what Satoshi did, whoever they are, whoever he is, whoever she is. So a white paper was basically, it's something that you publish out there to simply explain what your algorithms are going to do. So like the Bitcoin white paper explained what the consensus algorithm does, this thing that's going to solve the Byzantine fault tolerance problem. So a white paper just basically explains what you've done. So think of it like a PhD thesis, but a very summarized PhD thesis explaining something extremely complex. So you need that to explain the technical prowess of what you've created, how it's going to operate. In theory.
So we're going into all the technical stuff and far more questions, which I'll be bringing to you. So we'll get there eventually.
Yes.
But looking at cryptocurrency, would you say, or would you argue for or against, or have your opinion about the fact that some are calling cryptocurrency a form of gambling?
I think it's beautiful. Let it be gambling. Let it be whatever it is. I still stick to the let it be official. Let it be the most important thing in the world. Let it be the most useless thing in the world. It basically boils down to this one thing, what you said. Crypto is not going anywhere. So if the older folks decide, oh, we're tired of crypto, we made enough money, we're done with this, guess what? Some other 10-year-old kid is going to come up and form their own revolutionary technology, leveraging what started with Bitcoin, and they're going to create something amazing. So regardless of what anyone says, it's a very profitable system right now. There's a tremendous amount of opportunity, and just like artificial intelligence, the leaders in artificial intelligence will probably lead the world. That's quoting Putin, President Putin from Russia. Similarly with cryptocurrencies, we can already see people like Sam Bankman-Friedman, the CEO of the FTX exchange. This kid is already like a multi-billionaire. You think other banks aren't? Oh, ironic that his name is Bankman, but it's so institutions are paying attention, and obviously most of the things that we hear from mainstream media are to distract people. But yes, to allude to what you said, people have to be really, really careful because all those aspects are still here. We still have fraud. We still have the gambling aspects of it, and it's still a wild, wild west space. So you have to do your own research, and you have to be patient with what's going on. But people will call it names because it's a new thing. Everyone's scared of new things.
The reason why I brought that up was that not too long ago, there was a rug pull.
Yes.
With the Squid Coin tokens.
Oh, yeah.
Of course, there have been other rug pulls,
Yes.
but the Squid Coin token was one which really came into the headlines. Could you kindly explain to the listeners what exactly is a rug pull?
In the simplest words, you remember when I talked about when you asked about the yield farming, where people put two and two tokens. Okay, right now you can put multiple, and then you get a reward. So now exchanges, decentralized exchanges, have that token, that reward token that we talked about, that one that you get. Now, a lot of people get excited about these decentralized exchanges. They're like, oh my God, we got to FOMO invest all of our money into this token because people are getting rewarded for running. So this token is getting value because there's more liquidity into this exchange. But these were just smart programmers that realized, oh, damn, we've gotten so much money. So they crashed the market by taking all that profit that people have put in. And that crashes the token. And of course, when the token crashes, no one's going to be interested in that platform. It's going to die off. And if the programmers were indeed scammers, they're going to exit scam, they're going to close the website, and they're going to go away. So they've essentially stolen money directly from the people. And no one knows who they are, where they are, which country they're in. That's a rug pull. So the people that created that token wait for all that liquidity to build up. People pump money into that token, sell, take out all those millions. The price crashes from like $400. We saw that with Pancake Bunny on a Binance Smart Chain. This token was at a high of $500. That was not a rug pull actually. The team is solid there. That's another problem, which is called a flash loan attack, which was a problem that was in decentralized ecosystems, where a programmer can take a loan without necessarily having to back it up with any assets, and then they crash the market. So a rug pull is done by the team. A flash loan attack is done by a smart programmer exploiting the decentralized exchange that has been created. So there are two major problems in the DeFi ecosystem, and it's good that, a lot of people have lost a lot of money, but those problems, when they occur, solutions are built for them, and the space becomes safer and cleaner. So just like the red in the crypto market is very important for building, the green is just important for bringing attention. That's all. And for a few people to make tons of money and then crash the market, the red is the time to build. So there's beauty in both. There's beauty in rug pulls because it makes the network more secure. Next time, people become more careful in the way they put their money. So yin and yang, you gotta be careful. You gotta do your own research. But yeah,
it's funny, and you said something about a smart programmer just a few seconds ago.
all right.
When we're growing up and our parents said to us, we have to be doctors, we have to be lawyers.
Right.
Wouldn't it be funny that in the next generation with their kids, they tell their kids now, listen, you're going to have to be a programmer.
Yes.
You have to be.
You gotta do programming. This is how you talk to computers, man.
because my wife, she did computing years
nice.
ago.
Yeah.
And she's from South Asia.
Oh, cool.
And of course, with them, it's like you have to be a doctor.
Yes.
And nothing, being a doctor is the gold standard.
Lawyer,
computing.
things like.
Yeah, if you did computing, what the hell is that?
Mm-hmm.
But now.
Oh, the tides have turned. The tides have turned. And when you look at things like automation and computing power increasing, when people look at AI and their fear that AI is going to sort of take away so many jobs, you find that your presence in a virtual world or understanding how to create an economic system within a world that doesn't depend on the limitations of physical infrastructure becomes naturally the most positive, the most impactful ecosystem, because then humans can channel their minds actively to something they really want to they want to do, as opposed to the physical infrastructure where you're limited to the few things that exist in front of you. Being a doctor, being a lawyer, being in the crypto space. There's a kid from the UK that recently made $400,000 for selling NFTs, man. This kid is like 12. 12? Yes.
Wow.
So the virtual world has way more possibilities. Yes, parents are going to be telling their kids to learn programming and understand the virtual world. Mm-hmm.
Speaking of the virtual world, Zuckerberg decided to launch Metaverse.
Right.
As if he started the whole thing. And I remember years ago, there was something similar called Second Life. Do you remember that?
I remember it. I never dabbled too much, but yes.
Yeah, I actually dabbled in it, and I think I put in about £10 at the time. I can't. Maybe it's worth something now. I don't know. I don't even know what the password is.
I didn't even know you could invest. Oh, nice. That's cool.
Yeah, you could. You could buy land at the time. But anyway, talking about the virtual world.
Perfect.
Break it down just simply. What exactly is an NFT?
An NFT. Okay. The Ethereum network it's such a marvel of technology. what these things spawned up with Vitalik Buterin, the Ethereum network came up with certain standards that are governed by these things called smart contracts. There's the ERC20 standard. That's where you see all these tokens. The bubble that happened in 2017. Then the crypto kitties, crypto punks, all those things. So images, those are known as non-fungible tokens that exist on a standard called the ER720 standard on the Ethereum network. And there's another standard, the ER1150 standard, that sort of makes NFTs both fungible and non-fungible. So a non-fungible token is one that you cannot split in half. It just exists as one. Okay, so this can be a picture, a JPEG, or any other thing, a piece of virtual real estate, or a piece of physical real estate, and you've tokenized it. And then a fungible token, which is all the other tokens you see, you can split them up in many decimals, like up to maybe 8 decimals. You can have 1 Bitcoin or 0.5 Bitcoin, 0.1. You cannot have 0.1 of an NFT. That's why it's a non-fungible token. You cannot split it. So it's mostly seen in art, but a lot of things can have that NFT signature. Yeah.
Let's be honest. Some of the NFTs, they kind of suck.
Yeah. Of course. Of course. Yeah. It is like a bubble all over again with the tokens, the ERC20 tokens.
Yeah.
ICOs.
It's going to pop. I definitely believe so, because lately everyone's saying this NFT, that NFT,
Yes.
this NFT, and it's like, okay, listen. There's a term in Yoruba which is faraburukubale, which means calm down.
Okay.
It's just like, just calm down.
That's needed in the crypto
And-
space.
And do you think there's going to be a bubble soon enough for that? That's going to pop?
Oh my gosh, NFTs are tricky though. NFTs are tricky. Yes, very, very tricky. Yes, some bubbles are popped in NFTs, others will pop. But let me give an example. The CryptoPunks, there's not going to be a bubble. If there's a bubble, it's just going to be, of course, like right now the markets have tanked. Obviously, the CryptoPunks are cheaper. But if I have a CryptoPunk, I'm not in no rush to sell this thing because it's my identity. It's my ticket into this exclusive club. When you go into Bored Ape Yacht clubs, this is my ticket into the Bored Ape Yacht clubs. We're going to meet up with these rich individuals, each at least a minimum net worth of $250,000. At least they can get it by selling their NFT. And that puts you in that exclusive club. So legitimate projects are only going to grow stronger. The bubble can pop if you're in a specific project that fails, and but certain NFT projects, like for example Decentraland, when I first bought my first plot of land in Decentraland, I bought it for $500. Right now a plot of land in Decentraland is going for $13,000. Okay, I'm not about to sell my plot of land. No. I mean,
in Africa, of course you're not going to sell your plot.
no. I mean, my mom has taught me better. Don't sell land. It's not a good idea. Okay. Now, I know people. I mean, I've seen other content creators that have flipped land here and there, and they've made a ton of money. That goes into the traders. Okay. Some people want to do that, and it's extremely profitable because these prices fluctuate. But that's one example of an NFT that some people just aren't going to sell, because you have this virtual real estate. You can essentially do whatever you want. You can invite people. You can create your own house where the only people that can enter that house are people with the Bored Ape Yacht Club NFT. These projects. Okay, I'm not going to name other names because I don't want to promote projects here. But yeah, that's a very good example of NFTs and how the dynamic with the NFTs is quite different from the way we see the crypto landscape. And I think it's one of the things that's going to really create that mainstream adoption of cryptocurrencies, because it's going to reduce that volatility, or at least it's going to take it out of our eyes. We don't want to look at volatility all the time. We want to operate without that distraction of the prices. And I think NFTs do that right now. But there's bubbles in projects that are not legitimate.
So at the moment, cryptocurrencies across the board, including real life counterparts like S&P 500 and their stocks, they're tanking at the moment.
Yes.
But with NFTs, does the value go down as well, or does it still remain the same? So Bitcoin went up to 64,000 or more, I believe, but at the moment it's bordering around 32 or 30,000 pounds. I forget.
Right.
Would the value of an NFT be in the same scenario as well? Would it go down in quality, or does it just remain constant, like a USDC coin ish?
I've looked at a couple of NFTs that were there's some NFTs that I wanted to get, but they were kind of out of my price range. There's this I'll just name it. There's a project called the Meta Key, which is created by a guy called Mari, who was known for flipping land in Decentraland. And so some of his Meta Keys, the original ones, like 500, were going for like $30,000, and right now just one Meta Key is going for $13,000. Now, I will not call that a bubble. No, maybe $18,000. So it's dropped by almost half of its price. I the thing about NFTs is that even if the price crashes, you can sell it for more of that token. You get what I mean? So you get less in. For example, if the price of Decentraland was to crash back, let's say to $100 per plot of land, what someone can do, they can sell it for way more mana. The native currency, you can sell it for way more mana, so you get a lower dollar value. But if you're truly confident in that ecosystem, eventually this mana will be way more valuable, and you can even buy back your land at a much lower mana price and get it back. So you still have mana, you bought back your land at a much lower mana price, but in dollar value it's that much higher. So there's many ways of playing with the NFT space. You're not just limited to one metric, the sort of price metric. You have the land, and you have the coins, and you have the fiat value within which they're valued, and you can play around that to actually avoid the bubble. For example, the meta keys that are going for from 13,000 now to 15,000, the people that own them, they can decide, okay, Ethereum is much cheaper now, so I'll sell at 30,000. Maybe I'll just give you an example. I was selling it for 4 Ethereum, 6 Ethereum. Just give me an example. Now at this price of Ethereum, I'll get less money, but I'm going to sell it for 10 Ethereum. And then wait for Ethereum to go back up. Then when Ethereum is like 20,000, I'll buy it for 2 Ethereum. So I still have a bunch of Ethereum, and I have the meta key. So I bought it for a much higher price, but I have Ethereum left. So that's the trick about NFTs. They're quite interesting. They're not just limited to one standard of valuation. Yeah.
Okay.
Yeah.
All right, you're listening to the Swinging Palm Trees podcast, and my guest today is Mawa, and we're talking all things crypto. But for now, we're going to take a quick break away from that, and Mawa's going to share with us his quote or proverb that he'd like to share with us today.
The only true wisdom is knowing that you know nothing. That's a quote by Socrates. And I think if anyone understands that quote, it can change a lot in this world. If you're walking on the street and someone's angry at you, don't just assume that those people have a problem with you. Maybe they have something going on in their life. So don't just make assumptions because someone looked at you the wrong way or someone did something. Maybe what makes you think that has anything to do with you? And that same thing, that theory can also be applied in so many other things. I don't know anything about cryptocurrencies. I'm just learning. I can't just assume that I know stuff because that's how I'm going to get wrecked. So the true wisdom is knowing that you know nothing. And I think that's a quote I can give today.
Could you say that in either Chinese, i.e. Mandarin and Cantonese, or can you say in your Ugandan dialect? You can choose one or the other.
I could try in my own language. I'm not that proficient anymore, but amagezi, which means, amagezi garimu kumanya nti tewali kyomanyi, which means that amagezi, which is brains or wisdom, gari, which it's in, knowing, or kumanya nti tewali kyomanyi, that you know nothing. So yeah, in my language.
Have you always been a fan of Socrates?
I've read a bit of philosophy, and honestly, these guys were more forward thinking than people currently the people currently now are living in the past beyond those guys. They predicted the future better currently than most. So philosophy is like religion, but without the aspect of God. That's the way I can think about it. Philosophy is all about consequences and understanding that your decisions that you make in life have consequences. So in understanding that every decision has a consequence, then you're careful with the decisions that you make, and you learn to be respectful to other people and the things around you. And I think that's a value that can be picked from philosophy, understanding what is justice, what is injustice, what is just and what is not just. And if you if you understand what is just, what is not just like in business, understand what's a liability, what's an asset. That's the basis of sort of building that philosophy over there. Yeah.
Okay.
Yeah.
So we're going to go back to all things cryptocurrency, and let's talk about, actually, I've got three things I want to talk to you about. But first of all, let's talk about your passion for Fetch AI. First of all, could you kindly share with people what exactly is Fetch AI? And secondly, why are you obsessed with it?
Oh my God. Sometimes I feel embarrassed because I feel like, oh my, I'm so obsessed with an altcoin or a crap coin. But no, I think the Fetch people are cringing right now for me saying that. But the thing is, I've looked at the crypto space for so long. I've looked at cryptocurrencies like, of course, Bitcoin, Ethereum. I've read some of the books. I've looked at XRP, which is a fascinating ecosystem. I was obsessed with EOS, but the company did a horrible job after raising $4 billion. So, Fetch, I was doing my PhD, as you said at the beginning of this video. Amazing research, by the way. So, I was in my room doing what companies are doing, both blockchain and artificial intelligence, because I didn't want to leave the artificial intelligence stuff because the blockchain stuff, because I felt like the PhD was going to be a distraction. So doing research, and then eventually one day I look at my email address, Proton Mail, and it's an email from Akin, a blogger site, and there was an article written by someone talking about Ocean Protocol, which is one of the biggest platforms when it comes to AI. And then they talked about this thing called Fetch.AI and how they have these things called autonomous economic agents, and how these things you can build them to the virtual assistants, and how this person wanted to use them. And this person, I've never seen them write any other article. That was way back, like 2 years ago or something. So I was like fascinated. What is this project? What is it about? Is it even a crypto project? What's up with this? And when I started looking into it, I was completely drawn in by the more I started reading about things like multi-agent systems. So you see papers written about multi-agent systems and how these things are supposed to operate. So Fetch essentially tries to bring that to life. I can explain a little bit more, but so Fetch, yeah.
Yeah, please continue.
Okay.
Continue.
So Fetch.AI is an ecosystem that wants to focus on the buzzwords of machine learning and artificial intelligence. But what I like about them is that they have this approach. Their MO is creating what we call an autonomous economic agent. So think of that as a universe, as a world. And within this universe, they think of like human beings living within this world. And these human beings think of them as these autonomous economic agents. And each of these agents contain data within them. This data or a certain programming, they can make decisions, autonomous decisions on their own without necessarily needing constant human input. But they can think of them as swarm of drones. Within that environment, they can easily communicate with other agents to make smart decisions on behalf of their owners, on behalf of a machine. But within they encapsulate coding that allows them to make specific decisions customized to the entity that owns them. So in short, they're supposed to make smart contracts truly smart, and this whole crypto space truly smart. Smart in terms of decision making and reducing your presence and you don't have to constantly look at your DeFi protocol and what it's doing. You don't have to constantly worry about a rug pull, because these agents are going to do these decisions for you, and some of these products already exist, created by them. It's an amazing project, to be honest.
And how is it practical, or how is the application practical in the real world?
Okay, I'll give an example of one of the applications they created, which is a DeFi bot. Okay, so with this bot, you can, when you provide liquidity, you can put your liquidity details within there. It's also run by smart contracts. So you tell this thing, hey, I've put in liquidity worth $1,000 worth of Ethereum, $1,000 worth of USDT. If you sense at any one point, I put in the price when Ethereum is $1,000. If at any one point this Ethereum drops to $600, remove my liquidity, convert that Ethereum back to USD Tether. Never have to worry about it again. So if there's a rug pull, this agent will pull out your money as soon as that price is reached, convert it to US dollars, and by the time you look at the news there was a rug pull, you're not affected.
That's very
It's
smart.
really cool. It's really
That
cool.
is
Right now, they've created an agent that actually you can use on Uniswap and PancakeSwap, the biggest decentralized exchange on Binance Smart Chain. And these guys are on the Cosmos blockchain. On the Cosmos blockchain, which has implemented this interconnective standard in the cryptocurrencies, which means you can communicate with different blockchains. You don't have to be held to one particular standard, but you can use these algorithms within the Cosmos ecosystem, and it's going to connect to other blockchains. So, which means these agents are not only limited to the Fetch.AI blockchain, but they can also be spread out to all other blockchains that are connected to the Cosmos ecosystem, and of which Binance Smart Chain, Crypto.org, Terra Luna, so many other big cryptocurrencies are Polygon Network, which is one of the most biggest layer 2 scaling solutions for the Ethereum network. They use the consensus algorithm of the Cosmos ecosystem, which means any day they can implement the inter-blockchain communication protocol, which allows all these blockchains to communicate with each other. So I'm not just obsessed with Fetch, but it's just that I learn a lot from them, and I also appreciate what other projects are doing by looking at their thought process in the way they're thinking about things. So not only can these agents spread out to these ecosystems, but they can also perform very many functions like oracles, providing price feeds. You can have your own agent that can order for you a plane ticket. It's tailored to your needs. It knows what airline you want. It knows what seat you want. It knows when you want that airline, and you've told it, only buy for me that ticket when it's below £800, and it will only buy you that ticket. So even if prices fluctuate, it will be able to catch that price at that moment and your perfect seat, and you don't have to worry about it. So I think these things are going to change the world, the physical and the virtual world, and not too many people know about them. So it's a truly fascinating company. And one more thing, they focus on artificial intelligence. This is not just, there's a competition they held a couple of while back where they did this generated art. So I don't know what algorithm they use, but the algorithm I know that you can use is called a generative adversarial network. So you can input certain data, and it outputs the required pictures or data that you want. So they did this competition, and they have those algorithmically generated machine learning art pieces that are generated by machine learning through a collective effort of the community. So they've actually created products that demonstrate what they want to create. And the more the Cosmos ecosystem upgrades to these realistic standards that we can see that exist right now, that the inter-blockchain communication protocol, these guys are also fast at upgrading to these systems. So it's a beautiful dance. And there's some big projects also soon linking to the Ethereum network, and then eventually Bitcoin.
so. Question: has Fetch AI approached you to be their evangelist
No
for
way.
all things?
No way. No way. And I don't want to be. I don't want to be. I haven't received a cent from them. Actually, the only thing I got from them was like maybe a year back. I got a Fetch t-shirt. Okay, that was before even the bull market. One of them said, the guy said, "Oh man, we like what you do. We'd like to send you this Fetch t-shirt, like the t-shirt you have on, but it has the Fetch logo. That's it." But yeah, sometimes when they could have certain programs, when you build communities for them, whatever, you can make a claim. I've never made any of those claims not because it's bad, but because I don't want to feel like I'm required to talk about them.
Of course,
Yeah,
of course.
there's a video I did. Yeah. One more thing. There's a video I did when I was evaluating that DeFi agent. That's one of the most beautiful videos I did, because when they released their update, the bot that I just told you about that can save you from rug pulls, I literally sat down, I popped up my computer, popped up the video recording stuff. Let me start the YouTube video, and I explained to people how to use this thing. So if it had failed during my video, I would have told everyone, there you go. It doesn't work. It worked perfectly through the whole video. And the next day I made a new video. Did the agent work? It had worked. It actually taken out my liquidity. So that's what I call transparency. And yeah, there's no way I'd talk about them, or there's no way I'd talk about that product if I was getting some kind of remuneration from them.
Of course.
Yeah.
I think it helps that since you're not,
Yeah.
but you're still passionate about it, I think it speaks volumes that you truly believe in their product.
Yeah.
And I think that in itself is its own reward. So anyway, let's move away from Fetch
Yes.
AI
Okay.
and
Yeah.
let's talk about a cryptocurrency and Africa, where to next? Because I read somewhere that in Africa, in Nigeria has the highest percentage of people in cryptocurrency. Apparently, I
Right?
don't
Yeah,
know
I
true
saw that. I
or
saw that
not.
recently. I saw that recently. Yeah.
Do you think, with the way how things are going on in Africa and its economic fluctuations, if you will, do you think that this is a needed form of
Oh my God.
transaction?
Oh my God. Yes. Yes. Because one reason. All the freaking politicians, doesn't matter what they do, what they say. Okay, to some extent it matters what they do. I'm not talking about crypto, their own decisions, geopolitical decisions and so on. I know an artist in Nigeria. Now listen to this. Like this guy, because I was in NFTs. I'm not saying no. I don't. I'm not. I wish I was like wealthy in NFTs, but I was seeing the NFT space before it became popular the way it is. There was this guy. I think it's called Osinachi. Yes, that's his name. Osinachi. This guy, I bet right now is a millionaire. Because if I look at the art pieces he's been selling, some of them were going. Recently, I saw he sold something for $200,000. He sold art pieces for 20 Ethereum. He sold art pieces for 30 Ethereum. When will this guy have ever made that kind of money? When? As an not just as an artist, but as an African. When? So that's just one person. That's just one person that has left, not only left poverty, but has joined a certain class of people that are very few on the African continent, and it basically opens doors for him to do plenty of other things. Now, the reason why I brought that example is because another kid somewhere in Somalia can decide that, hey, I love making bits. I love doing 3D drawings. I like doing this. And you can find a way of implementing this in a way that can be on a blockchain. It can be in a decentralized space. It's basically anyone in the world can take a look at it. And this kid can financially take themselves out of these trenches that are being created by the political systems within their own country, and then they can empower themselves. They can eventually start a whole new line of generation, eliminating that poverty without having to consult their central bank, without having to consult their president. Of course, they will never be able to talk to the president without having to consult their local chief or whatever, their local council chief or their local mayor. Basically, you have your phone. You have maybe you purchased a computer, a small computer, and you can do this on that computer every 1 hour a day when you have the internet. And you find yourself, and you find yourself making $100 every month. You know.
So of course it's opening up.
Just
new
giving an
ventures
example.
for people. Yeah.
Yes.
But of course it's opening up ventures for people
Yes.
who were never within that reach
Who were never within.
because of cryptocurrency. Because I read something about Cardano and what Cardano was/is doing with regards how it's set up for nations in Africa. I don't know too much about it, but am I right in saying that? Are you familiar with the whole thing of Cardano?
I think Cardano had some talks with the Ethiopian government, and the Binance exchange is also deep in Africa. I've actually been at one time. I was in the same room with CZ Binance, the CEO of Binance, when he was
wow.
he was in Uganda for a while, and then we were in the same space with him. We were Uganda was kind of forward thinking back then in 2017. So he came, the president was there, but it was like a small, but not a small space, but a couple of people that knew that. Anyways, it disappoints me that I would have preferred, like, it's amazing what Charles Hoskinson's trying to do with Cardano. It's amazing. CZ Binance, kudos to that guy. Oh my God, like he has completely changed the landscape. That's like a bank within Africa. You can convert to Nigerian naira, Ugandan shillings, Kenyan shillings, deposit this to your mobile money phone through the Binance. So it has made life so much easier. There was other platforms but I wish instead of that we had an African-born cryptocurrency or project that truly understands the Asian project. Like the Asians understand because they know where they came from, but so they understand where the Africans are and where they want to be because it's not too far. But I think it would be nice if we can also start to create our own standards. So I appreciate other standards that are being created, but right now I'm speaking to myself that I need to work harder. and see that it's to see how I can create solutions that understand our market as well. So I can sort of be a part of the ecosystem in terms of the way crypto is developing on the motherland. And I'm saying me because I don't want to be an entity that's just complaining. But how can I start creating something as an African that truly understands the African market? But yeah, appreciate what all these other people are trying to do, obviously, because in a way it's bringing attention to the market and things like that. Yeah. But there's I know projects, DeFi platforms building in Nigeria that are really becoming successful. Nigeria it's a leader in the crypto space. Nigeria, Kenya, things like yeah.
So, which brings me now, before we get to the fun part,
Okay.
one more thing about cryptocurrency before we move away from it: gas fees.
Oh my god. Oh my gosh.
Now, for anyone who's dabbled or who has gone into cryptocurrency, if you want to set a person off, just mention gas fees. Mawa, explain to people what exactly are gas fees.
The highest gas fees are paid on a single transaction were $400. Yes. Yes, and the transaction was was probably like maybe less, maybe $150.
That's nothing. A friend of mine,
Yeah.
she tried to do a transaction
Yeah.
for something worth about maybe 2,000 pounds, I forget.
Yeah.
And she sent me what the receipt was going to be: 16,000 pounds.
Yes. Yes. Okay. So let's get into that. Gas fees. Any network that's currently running on the current consensus algorithm. Let's just talk about Ethereum. The more the users, we talked about the proof of work. So the more people mine, the more competitive it gets. So there's these things called memory pools within a blockchain. So these transactions, think of it as traffic on a road, and think of the validators or the miners as the traffic lights. So maybe something has happened to these traffic lights, and now they're taking a much longer time, or they're only accepting. If you want to pass the traffic lights, if you want to drive through the red, you got to drive a Ferrari. You know, you got to drive the expensive BMW. If you're driving a tiny car, you got to wait a little bit longer. So that's what happens. If you're not willing to pay a lot of fees because there's a lot of congestion on the network, a lot of transactions want to fit into this small block that ticks every couple of minutes, because every block ticks a couple of minutes and it has the limited transactions it can have. So these transactions are waiting, lining up in the memory pool. So it goes to the highest bidder. The highest bidder gets the first transaction. So if the lowest base if the Corona has to pay $400 to go through that space, the Ferrari is gonna have to pay maybe 50. I've seen people pay $20,000 in gas fees. So it's crazy because maybe they were trying to get some NFT they thought was really, really valuable. Actually, that was more like they listed their NFT for a much lower price than they wanted to, and the person that scooped it up really fast before this person had the chance to do that paid like over $30,000 in gas fees.
I read about that.
Yes. So gas fees are not a fun thing. They're making me really dislike the Ethereum not the Ethereum ecosystem, but the Ethereum maximalists that do not address this feature and how it's going to be fixed. Guess what? They think, oh, Ethereum is going to upgrade to version 2.0 and all these things is going to be fixed. When Ethereum was trying to upgrade to the new standard they upgraded to, what was that? There was a recent proposal they upgraded to. Everyone's like, oh, it's going to burn Ethereum. The one that's starting to burn Ethereum is going to reduce the gas fees. Of course, it did not happen. Gas fees is just worse. And everyone's like, Ethereum goes to 2.0. But, I mean, I hope it does. But let me quote Vitalik himself. Taking Ethereum from the current state to Ethereum 2.0 is like fixing a plane in mid-flight. I think people underestimate the difficulty of fixing a plane as it's flying. People underestimate that difficulty. So these are words. These are quote from Vitalik himself. Not just a picture with a quote, but him saying these words. If Ethereum goes to 2.0 and implements their sharding algorithm, which is supposed to have parallel computing of these blockchains, sharding does not out of the box support transactions. Of course, I'm not a pro.
It doesn't.
Not out of the box. If it does, it does not
support cross-shard transactions. So you cannot make a transaction from one shard to another. So you're still locked into that one whatever that is, one shard. So what I'm saying, of course, a lot of people are bullish on Ethereum. There's so much brain power around the Ethereum ecosystem, but all I'm saying, people that are maximalist in the Ethereum ecosystem, they should not forget to mention at least that they recognize the problems that are there, and to at least to some extent explain why they think Ethereum is going to be the leader in this space, like a logical explanation. I seriously don't get it. I mean, Ethereum, I don't want Ethereum to be a leader. I don't want XRP to be a leader. I don't want Cosmos to be a leader. I don't want Polkadot to be a leader. I don't want to live in a Solana world. I don't want to move around and everyone owns Solana and they're like slaves to Solana, slaves to Ethereum, slaves to Bitcoin. No. A true decentralized space is where we have options that work. And people like Andreas Antonopoulos understand this. He was one of the first Bitcoin people, wrote the Bitcoin Standard book, wrote the Ethereum book. This guy, all the way from his videos back then, he's never been a Bitcoin maximalist. And I think because he's never really truly started out by investing in Bitcoin. So his brains were in Bitcoin, not the money. So because of that, when you hear his talks way back, when the whole world was not too sure, where most people are still thinking that Bitcoin is going to be the end-all be-all, he used to say, oh, there's going to be so many cryptocurrencies that are beheld to certain communities and their standards. And it made sense. This is a decentralized... Bitcoin is an open source technology that can be forked by anyone to create their own standards, their own sort of spin on the network. So... Because...
Sorry, go for it.
Yeah, so just to cap off, I'm not hating on any ecosystem. Because most of the things I've talked about, I've been involved in them in one point or another, or still am. But it's just that this is no space for maximalism. This is a fast-moving space that anyone with knowledge can spin up something.
Okay. Because I know Ethereum has a huge ecosystem. And
very huge.
From that ecosystem, you have everything coming from the ERC20 token, which I mentioned. So if you want to do a transaction within that ecosystem,
you have to buy Ethereum. You have to buy Ethereum. If it doesn't matter. Yes.
Yeah,
that is wrong.
You have to buy Ethereum, and you have to make sure that when you make the transaction, which is within that ERC20 token, you have enough Ethereum to make the transaction go ahead.
Of this token that has nothing,
Exactly, because I've heard of stories of people who have not bought enough Ethereum.
Yes.
They've sent the transactions and it's still pending.
Yes, it's still pending. And if you're not technical enough, this thing can pen for like 2 weeks, a month, 2 months. But if you're technical, you can search up some things on how to fix it. So, okay, I'll make a comparison. Ethereum created some amazing stuff. This is going to be like 1 minute. Then I'll make a comparison. Ethereum, you have to buy Ethereum. Now, the difference with for example, a platform like the Cosmos ecosystem, I'm not too sure about I think Polkadot you still have. I'm not too sure about that. Let me just compare with Cosmos because they have an actual inter-blockchain communication standard. That's why. So with Cosmos, you can have a cryptocurrency that creates resources that other blockchains on the Cosmos ecosystem can tap into. But this, even if they're tapping into, let's say, security, so you built a robust ecosystem called a hub on the Cosmos ecosystem that has its own token. So other ecosystems connected to your hub can share your security. That's where they want to move to. So that you're able to share some of the resources like security. But guess what? If someone wants right now to transact in another token on the Cosmos blockchain, they just transfer that token across the inter-blockchain communication protocol. You don't need to own Cosmos Atom to do that. No, all you have to own is that token, that token, even if it's connected to the hub, and you pay fees in that same token. And guess what? Some of these fees are zero. And some of these are 0.000 something. 0.000.
Meanwhile, in Ethereum land,
Ethereum's telling you, you got to pay like $1,000. It's crazy. So that's all I'm saying. I think we need to open our eyes and try to look at this space in a fair way, not just through the lens of people that have a ton of money that bought Ethereum when it was $1, and now that it's 4,000 or 3, whatever the price is right now, they're blinded by that kind of thought process. Ethereum, if you want to listen to people in the Ethereum network, listen to the people that are programmers that are invested in a technical level, and if they're still bullish in what they're creating, understand, because it's expensive to create those contracts that they're creating. They're going to pay gas fees and all that stuff. So those people, you want to listen to them and understand why they're still bullish on the Ethereum ecosystem, and that will make more sense.
And like we've said time and time and again, this is not financial
No,
advice
not at all.
whatsoever. Please do your own research. However, I would say that if you are interested, follow not just the money, but also the developers.
Yes.
See exactly what the developers are working on
Yes.
and see the practical application as well.
Mm-hmm.
That way, it will give you some insight into what your decision would be. Now, Mawa, before we go, because we can go on talking about all things
For
crypto,
sure.
if you were to create your own crypto coin, what would it be called?
Mawa coin.
Well,
No, I'm just
it's
kidding.
kind of obvious.
The closest thing I've created to a crypto coin is an NFT, and I named it Neo, and that's no. I put a poll out there to the community that okay, the person to give a name to this NFT will get one for free, and I created them myself, not this generated stuff. And the person was like, okay, we understand your MO, so I'll call it Neo, which is I think something innovation operator. New innovative operator. That's what NEO stood for. So that's what I called those NFTs because of what they're trying to do and what they represented. So even then, I couldn't give a name. I put out a poll to the community, and the person gave a awesome name. But that's just a joke. Mawa coin. Yeah. But if I was to create a cryptocurrency, I'll definitely look at a stable coin. Yeah.
And on what ecosystem would you want it on?
Oh my
And
gosh.
don't mention Fetch.
No. It'll probably be. People shouldn't judge me. Probably be on the Binance Smart Chain, because it's the most practical right now. It has the most trade, and it's the first of its kind to actually prove a use case to challenge the Ethereum network without the founders fronting their product as something that's going to challenge the Ethereum network. You're like, okay, let's use the Cosmos ecosystem. Let's tap into the Ethereum virtual machine. Let's be able to use the MetaMask, and it created so much innovation within the decentralized space that allowed us to see things like rug pools and all these things, problems with DeFi, because it was a cheap place to sort of replicate what you could do on Ethereum without having to incur all those fees. So for now, to be honest, I think it'll be the Binance ecosystem. Of course, I know there's a lot of haters for that ecosystem. I don't know why. But to be honest, I think they've done so much in the crypto space. They've innovated and they've fronted so many things we look at today, and we look at them as standards. So they took a brave move that put them where they are right now. The CEO of Binance as well is a very humble guy. A lot of people like Solana, Avalanche, and those things. The only bit that I'm not too I want to be careful with is the VC money. Too much VC control in these ecosystems. I feel it's not fair, man. It's not fair. We're going back to that centralized control. Still, like all these people owning all these tokens, they can still do whatever they want, crash the market, do anything. So at least Binance, you know that even if there's a lot of haters, they're not going to act in a way that's detrimental to their own reputation. At least they're going to try to build out. So as an experiment, I would use that. And yeah, if it's not Binance, I would use probably the Polygon ecosystem, because they're trying to scale the Ethereum network. And if they emerge as a successful, so things like NFTs are definitely, like my NFTs are on the Polygon network. But if I were to launch something like a coin, I'd probably look at the Binance ecosystem for that purpose. And for something else, for another purpose, I could look at the Cosmos ecosystem for another purpose. So that's the kind of democratization I'm talking about. Ethereum gets cheaper, maybe that's the best place to do something else, maybe to build metaverses and all those things. So it's just a fair way of looking at things. XRP, if I want to launch an IOU for something like real estate, or I'm creating my own line of headphones and I want people to have shares, an easy way to create IOUs, representation of your ownership of these headphones, I'd probably do that with XRP because it's so easy to do. Yeah.
Okay, listen. In as much as I would love to keep on talking about all things cryptocurrency, where you are at the moment, I think it's about, what time is it now in Thailand?
It's like 9:22 p.m. Yeah.
Okay, right. You need to go and have fun.
Yeah, and it's a Friday, man. Oh gosh, I gotta go out there.
Mawa, first of all, thank you so much for coming on to the Swinging Palm Trees podcast. How
Awesome.
can people get in touch with you?
First of all, Swinging Palm Trees, that's an amazing name. Thank you for having me
Thank
on the
you.
show. Yeah, it's a really chill name though. Okay, Mawa Maverick, that's Mawa. The Maverick is the way you spell Maverick, Maverick. Type that in Twitter, you can find me on Twitter with that. And you can start from there. That's the best way to same thing with YouTube. Type Mawa Maverick, you should find me on YouTube. Yeah.
Okay. And if you want to come on to the episode, oh, before I forget, if you were minting your coin, what music would you be playing?
If I was minting my coin,
Yeah, your Mawa coin. What music would you be playing?
oh my gosh. My best music is hip hop. So, I won't name the artist I'd be playing. It will be hip hop probably. It depends on my mood. Depends on my mood. Depends on my mood. I probably play an Ed Sheeran soundtrack in the background. And mashed up with Ed Sheeran and some other artists or something.
Okay.
Skepta or
Well,
something. I don't know if he's got any with him. Yeah.
okay. Well, on that note, thank you so much for listening to
That's
this
not
episode
horrible.
of the Swinging Palm Trees. If you can contact me at the Swinging Palm Trees at gmail.com. And until next time, be well and Pax Vobiscum.
Awesome. Thank you for having me on the show.
And we're done. All right, I'm just going to stop the